What are the thoughts of the private sector on the mid-year budget review? After the presentation, there has been some debates, but can it be described as business-friendly? What are the concerns of the private sector? Well, one institution that has done some engagement with the private sector in terms of gauging their pulse on their concerns about this mid-year review and even the budget as well as PricewaterhouseCoopers, PwC Ghana. And today, I'm indeed grateful to engage its senior country partner, Vish Ashiagbor, to get his thoughts on their report that they put together on this mid-year budget review and also their prestigious banking survey when they engage some chief executives and even industry players about development in the banking sector. Mr. Vish Ashiagbor, thank you so much for your time. And how has it been? It's been quite a long time.
George, thank you very much.
You've been hiding.
I wouldn't say I've been hiding. We've been quietly doing the best we can in the background, assisting our clients and trying to contribute to general discourse around the business environment and supporting government also where we can. But it's good to see you again.
But not mentioning their names. I mean, what is the pulse? I mean, we hear a lot of things, but you know, one thing that I always love to engage you is you guys are on the ground and the everyday engagement and the work you put together. And not mentioning in terms of the pulse of the private sector, what are their concerns?
So before I speak to concerns, I think it's always important to acknowledge that it's not all bad, right? So let me say that there's cautious optimism, if I can use that term. There's cautious optimism. Because clearly we can all see private sector will acknowledge that there has been a certain amount of stability that is emerging and that the prospects look reasonable. But there is still, like I said, it's cautious optimism. So there's still some trepidation out there as to how sustainable this is. So in a summary, I think that's how I'll put it.
There's talk about stability or
Yes.
signs of recovery.
Yes.
There are some who would always want to argue that these are just hard macro numbers.
Correct.
Is this stability impacting on the operations of businesses based on what you have seen and based on what they are telling you?
So there is some short-term impacts, or there are some short-term impacts. But as you will know, George, in business, your focus is beyond the short term. So for example, if we take the exchange rate, we have to acknowledge that there has been some relative stability in the last couple of months.
Which you
The keyword is
are
relative.
quite excited because in the past where we saw the gyration almost every day, that made it difficult for most businesses to plan.
That is true, but like I said, the key word there is relative. And the point you just made about difficulty in terms of planning and the future outlook, that remains because we've seen the relative stability in the last couple of months. The big question is, how sustainable is it? So if you are a business person and you're thinking a year ahead, 18 months ahead, 5 years ahead, what is your outlook? And I think that is still uncertain.
How bad is this currency issue for planning? Because then, if I get from you again the pulse on which you pick up from the sector, people just cannot plan because then you're looking at how that will impact badly on your returns and whether I can go to something like the Black Group or these big institutional investors and pension fund managers to take funds and invest in the country.
Yes, George. So the exchange rate is one indicator. So I wouldn't focus overly on the exchange rate. There are a number of other things that business people are concerned about. I mean, exchange rate is clearly a significant factor because of the nature of economy where we are quite import dependent. So if you are a manufacturer, say, and you're having to import your raw materials, the exchange rate is a big issue for you. Even if you're in the service industry, some of your inputs, licensing fees for, let's say, technology applications that you may deploy in your business, may be indexed to the dollar because these are global products that you may be acquiring. So that is a major concern for businesses generally, given our particular situation here in Ghana. But it's not the only factor. So there's concerns around consumer demand, for example. There's concerns around...
Is it dropping?
Difficult to say, except that when the outlook is not as certain as people would like, obviously we all start to hedge a little bit.
Because if I look at the numbers of some of these companies, and I stand to be educated. I mean, MTN, for instance, released their half-year numbers. They made over 8 billion Ghana cedis. Data is driving the numbers. You know, mobile money is driving the numbers. And again, I mean, I stand with, even with my little accounting and auditing, I stand to be educated that when I see some of these numbers, I want to put myself on the street and ask the question that, are things that bad? Or is just the directing of number? Because I look at Unilever, I'm looking at MTN, and in the midst of these crises, and there's no debate about that, the numbers are still looking good.
So it kind of depends on which sector you're looking at, George. You know, some products and services have become demand, or the demand for those goods and services have become relatively inelastic, right? So today, the environment in which we live, hardly will you be able to, in business, survive without a lot of data, you know, because you do need those for your transactions. So as much as the economy is difficult, you're still going to have to spend money on data and such like. And then if you talk about the Unilevers of this world,
open consumer goods.
Exactly. You still need to eat, right? You still need your sanitary products, etc. But what you may find is that the demand or the volumes that you're pushing out may drop in favor of cheaper substitutes, etc., depending on people's disposable income. So yes, some of the companies are still reporting strong numbers. But clearly there's stress and strain out there that we're all contending with.
With respect to the marginal stability of the city that we have seen, has that impacted on some of these businesses in terms of that little space and relief, and some of them who were even trying to review their investment decisions, because now there's some stability, so the decision to even lay off, shut down, readjust the business has maybe tapered a little bit?
I would not say so, because like I said before, you know, in business, you do not necessarily react to short-term indicators, because business is a long-term venture or even a medium-term venture, depending on what your outlook is, 5, 10, 20, 50 years, you know. So, and business has its ups and downs. So if an exchange rate goes off track for a short period of time, it doesn't necessarily mean that you're going to suddenly lay people off. Yes, you seek to do what you can in terms of reining in costs, etc. By the same token, if the rate strengthens, you probably take the benefit. So it's all in your bottom line, so to speak, and eventually into your cash flows. But where it becomes unsustainable, that's where you run into real difficulty. And it goes back to the conversation about predictability and whether things are sustainable. So the benefits that we've seen recently with the relative stability, and I say relative because it has still depreciated. So we're just looking at it in the context of what we've seen before. Relative stability. What a business person is seeking to understand is how much reliance can I place on this stability, and should I be making long-term investment decisions on the basis of this stability, or should I hold back a little bit and see what the outlook is? And I think that's where most businesses are today.
How has and you mentioned the outlook issue, how has the IMF program and the progress that we've made on the IMF program impacted on decisions that are based on the short to medium term? I'm not looking at long term yet.
Oh, I think greatly so, because there is certainly some comfort around the fact that we have clear indicators that we are to adhere to under the IMF program. And from all the indications we have so far, from government, from the IMF itself, from other organizations and people who comment on economic activity, it looks like we're on course, right? So I think that has actually, the IMF program has achieved the benefits that, or is beginning to achieve the benefits that we sought to achieve with the program in place.
And it's helped businesses like you or businesses that you've engaged to now see that now we can at least look at a short to medium term plan.
Relatively so. So in the short term, say between now and let's say December, which is short term in our view, or if you want to push it out a little further, between now
that could be short term.
That's short. Okay, so let's go a little bit further out. Let's go out a year.
Yeah.
Right. Let's go out a year. You have some idea as to how the economy is going to go, right? But within that 1 year time frame, we also have an election.
Yeah.
So there's a small question mark there. But yes, to your question, in the short term, it has brought some benefit. The question is the long term.
The long term thing. How has the debt exchange program, and I still on the outlook thing that you mentioned,
Okay.
raised a lot of doubt. And again, I'll go back to my economics class and finance class where we're told that government bonds, you can never default and everything, and all those things. How has it made the businesses out there a lot more conscious now, even when it comes to buying bonds and even government agreements and all that? Because some look at the domestic debt exchange program and they say that, listen, when we are even doing something, we need a third eye or a fourth eye, or we can't sleep with our two eyes closed. How has that impacted on businesses going forward in terms of planning and then the outlook bit again that you made?
Clearly it has had a significant impact. Just like you said, in Finance 101, you'll be taught that government bonds are risk-free, right?
Risk-free, yeah.
And I guess the thinking behind that is a sovereign generally doesn't default and has the ability to make resources available to service its debts. We know that that's not 100% correct, not just from our own experience, but of course other jurisdictions. We've seen it in South America. We've seen it even in Europe, Greece and as countries of that nature. But to your point, it clearly has had an impact. And if you look at those who typically invest in government bonds, which are basically the financial institutions, whether they are the pension funds or the banks or such like, or even individuals, maybe high net worths or well, maybe not even necessarily high net worths, people with a little bit of money they're trying to put aside for the future, you will see that there's now a great deal of caution around exposure to bonds and maybe how you, without getting too technical, how you even assess the value of those bonds looking into the future. So there's a lot of risk, let me say, that is now being attached to government instruments. And that's just the way I think it's going to be for some time. Yeah.
What timelines are you looking at? 2 or 3? Because some would say that bonds played a critical role. And I'm not saying that because of the outlook statement that you made. So if I'm still uncertain because of this, then it would impact on investment and everything that you do because of financial intermediation and all those things.
Yeah, clearly so, yes, yes. I mean, once any investor invests on the basis of their risk appetite, right? So where you have been bitten, you're going to be more cautious, right? But you can gain that confidence back over time, depending on how the market or the instruments or the borrower conducts themselves over time. So it's like anything else. You need to build that credibility. And it takes time to restore that credibility to the market. And that's what I mean by it probably will take some time. As to how long, it just very much depends on how well we progress against actually delivering what we've committed to delivering.
Since we've touched on the investment space as well, the bit about the external debt renegotiations as well and how they are moving. The IMF in their staff report actually warned that the faster we close the deal with these bilaterals, Eurobond holders and even the commercial creditors before December and sign the deal, the better, because any delay would not be good for the economy. Are they being overly concerned? Because we've still not had any agreement being signed now. No agreement in principle, Eurobond, bilateral, but these are also critical in the recovery of the economy.
Absolutely, but it goes back to the fundamental point that investors, whether you are just a financial investor or whether you are actually investing in a business, investors like as much certainty as possible. So to the extent that they are open or loose ends, the risk and the concern, the levels of risk and the levels of concern are still elevated. So I think it's just to encourage all the participants, with people sitting around the table trying to bring closure to these negotiations, to get it done as quickly as possible, so that at least we know where we're headed. We know what the impact is going to be. Then businesses, individuals can plan accordingly. So I think it's an appropriate statement.
A lot of businesses also in Ghana here worried about that, because some will say this is an external development. There are some who've connected that even to the performance of our local currency.
Absolutely.
How would this deal being closed on time in terms of agreement impact on the business environment, the investment space, and the larger economy?
So in simple terms, let me say that depending on what's agreed, it will impact on our fiscals, right? Or let me say our expenditure and the timing thereof, right? Which in turn affects the whole economy. It will affect demand, it will affect exchange rate potentially. So it's very important. It's not just the external creditors or external participants. Those of us here obviously will feel the impact, because at the end of the day, we are the ones who have to service the debt. It has to come from domestic sources at the end of the day. Revenue comes from us, which will then ultimately go to service these obligations. But the money has to come from somewhere, and it can only come from us.
Would that also impact on the Ghana city as well? Because there are some who've drawn some connections that if a deal is signed with the Eurobond holders, we could see some fresh offshore funds coming in and all the rest, and that could help in the currency as well.
So it will inspire additional confidence. The extent to which it will impact on the CD, I cannot tell, because it kind of depends on what we agree to ultimately, and whether the market believes that what we've agreed to is something that we can sustain, right? So if what the agreement is eventually signed off looks like something we can deliver upon without significant risk of disruption, then of course it builds confidence, and then people can invest with some additional level of confidence, using the confidence word again.
We'll be moving in more into your report you put together on the mid-year budget review.
Yeah.
But there's something that you also mentioned earlier, and today I'm getting back on picking a lot of things I said earlier on. The election risk.
Yes.
And I asked myself that I'm quite young. I've seen at least from the 92 elections and all the rest. And some are saying that on the political side, we've come so far.
Yes.
And not to mention the name of the company where I've engaged some big multinationals in this country, that they've actually frozen certain big projects that would have brought in serious capital inflow. What is it about this election risk that has gotten some of these businesses hold on with a lot of things? And I'll even come back to even the larger economy. Are they being, what is driving their decision? Because I know that you do a lot of engagement with them. Some are saying that they are not being fair.
I think that the concerns around the elections are to be expected, not just because of what has happened here in Ghana, but if you look around our continent, you'll find that there's always been pockets of challenge in terms of elections. That's not to suggest that, and I don't think that any of the companies that we have engaged are particularly concerned about social disruption or such like around the elections, because like you said, here in Ghana we have been able to manage these elections, you know, for you know, different cycles. But again, investors are concerned about policy direction or potential changes in policy, because again, investment is a long-term thing. And where you have a potential shift in direction, no matter who emerges successful in the election, then people are concerned, and therefore they'll adopt a wait-and-see approach. It should be lessened this cycle because we're in an IMF program, and whoever emerges successfully in this election, I don't think will have too much ability to change things, although you may have heard one or two people speak about potential.
There have been comments about
about potentially
about renegotiating the IMF deal, and from the opposition, former president saying that granted an interview to Reuters actually.
Absolutely. So again, those are some of the things that may that may create some uncertainty and filter into a little bit of let's wait and see how things emerge, you know, because it has implications for the environment, for the economy. And again, if you're a long-term investor, that will be of concern to you.
And do you see that as one of the examples that would see, and I'm tempted to mention, but I'll mention out some of these companies who are saying that if the major opposition party, that is more of a government in waiting, depending on how things will turn out, is now signaling that I want to renegotiate the fund program, that should get some people jilted.
Well, I stand to be corrected. I'm not quite sure that's what they said, that they'll seek to renegotiate the fund program. I think that the view out there from a business perspective is that nothing is set in stone, right? So depending on how things progress, according to the targets that we've agreed with the IMF, and depending on how things progress with the citizenry, because as you said yourself earlier, the citizens are still feeling the pinch. So depending on who's in government and their what they want to do in terms of striking an appropriate balance between giving some relief to the population whilst getting the economy back on track, then they maybe need to go back and review some of those targets. And I think that's what the reference was about.
So it's more of the fear of a policy change.
Correct.
That is what is putting some of these businesses on the edge and the wait and see.
Yes. I mean, ultimately, that's what it is. And again, I wouldn't go as far as to use the word fear. Maybe it's a little bit of a concern because it's a prospect that is out there. But in principle, there is a program that transcends the elections, because the 3-year program, the elections come somewhere in between. So as a country, we're tied to it. But again, in business, nothing is set in stone. You can always go and talk to the other party and see whether some accommodation can be made here and there if you think it's necessary. And I think that's what people are looking to
Help
understand.
me with the connection with the currency, because again, the business engagement thing. Recently, the governor of the Bank of Ghana, Dr. Ernest Addison, at the Monetary Policy Committee meeting, again admitted or cited the election-related fears and sentiment as being a major push factor now for the pressure on the Ghana cedi, and that is why he thinks that some of these things are very difficult to use monetary tools to deal with.
Absolutely, yeah.
Where's the connection with the city here and the elections, that people think that elections are coming? And again, that's what I'm saying, that maybe I'm too young, but the connection where people, we even have like 200 million Ghana cedis are saying that, let me change my money to Ghana cedis, let me put it in my room. Even people don't want to keep their monies in the banks. A lot of movement of cash, people are holding on to it. They are afraid what will happen, and all those things are impacting on the local currency.
George, I don't think it's any different from what we've just discussed. You have a possibility of a slight change in policy direction. And as I said, it's only a possibility because in principle we have a fund program that we've signed up to, that we are committed to carry through. But it's not absolute because it can be renegotiated. Let's take the example of revenue, for example. If a new government comes into office, irrespective of which political party we're referring to, and they say, for example, we are going to abolish certain tax handles, okay? What is the replacement for that revenue stream? Is there a replacement or is there not? If there isn't, obviously it has implications for the deficit and therefore roll-on impact onto the exchange rate, amongst other things. So I think all you are seeing is a natural risk mitigation approach by businesses and individuals to say that, well, since the outlook has some uncertainties and there's some risk associated with it, how do I protect myself in the best way possible to mitigate those risks? And like Governor Addison said, there's not much you can do about that from a policy point of view. It's just the sentiment. And as you know, business really operates based on sentiments.
And that was the question I was coming back to. How do you manage the sentiment? Because for some people, it is a problem. How do you manage the sentiment? Because then someone will say, okay, nothing can be done, so let's demand them. But how do you manage sentiment in these times? What do you do in these times to deal with the concerns of a lot of your clients and businesses who come to you for advice?
Absolutely. A very good question, George. And the way we think sentiment ought to be managed is by giving as much information and communicating as openly and as regularly as possible. Once people, businesses, individuals understand the direction of travel, and what has been done, what is being done, it influences the sentiment. Yes, there are risks in that because it can influence the sentiment either positively or negatively, depending on what you're communicating. But again, it allows people to plan. And the sentiment is driven by the amount of information that's available and the understanding of the landscape. So that is why, for example, if you look at the document that we put out around the media review, we were referring to the fact that it would have been good if we had a bit more information on the progress that we're making against the long-term structural reforms that we need to put in place, right? So the sentiment of investors, the sentiment of the business community, in our view, is managed or best managed by communicating as openly, as transparently, as regularly as you can. Because that's what people want, and then they can make their own decisions accordingly.
Well, I'll be coming back to delve more deep into that report you put together on the media budget if you going further in the economy as well. This is PM Express Business Edition. I'm engaging the senior country partner at PwC Ghana as you look at the economy, the business environment, and the media budget review. And going forward, what are his concerns? And also the banking landscape. What is changing based on their flagship banking survey report? This is PM Express Business Edition. Welcome back to PM Express Business Edition as we talk about the business environment, the economy, the banking sector, and then the outlook with no other person than the senior country partner at PwC Ghana, someone who is always used to engaging a lot of these businesses apart from the advisory, the accounting, the auditing, the finance work that they do. So Ashiagbor, let's come to the mid-year budget review. And one thing that caught my eye when I went through several times was the concern about the IMF program and the fact that you thought, and I stand to be educated, that the stability and what we are having right now, all those things could be linked to the fund program. And what will happen after the fund program? Where are you worried? Because if the structural reforms have taken place, they should last.
George, I wouldn't say we're worried. What we're saying quite clearly is that the program with the fund seems to be achieving some benefits or delivering some results. We know, I don't think it's a secret that where we do not have the fund, we tend to run into trouble. History has demonstrated that. What we're seeing today is because we're adhering to some of the agreements that we've made with the fund. So it's not that we're worried per se, we're just acknowledging that fact. Nor would I say that we are worried per se about what happens into the future. The question we're asking is that it would be nice if we had an update as to how we're progressing, because we felt that that was a missing link in what we heard the minister read when he presented the mid-year budget. And like we've already discussed in this meeting, the medium to long term is important for businesses, and that's where the question mark is for us.
But then doesn't it again raise questions about the structural reform? Because if the reforms are taking place and they are working, no business person and no independent advisory firm should be, and I use the word again, worried about what happens after 2027, 2028.
Yes, in principle, you're right. And we don't doubt that reforms are ongoing. All we're saying, going back to the question you asked me about sentiment, is that let's have some more information, let's have the communications around where exactly are we in terms of those reforms. Because you see, when you are in a crisis, whether at a national level, at a corporate level, or even at a personal level. When you're in a crisis, typically the first thing you seek to do is to stabilize. Right. Now, but that's not the end of it, because that will only serve you for the short term. As you're looking at that short-term problem and stabilizing that, you need to also be addressing the fundamental issues that got you into the crisis in the first place. So what we heard from the media review was some information in terms of where we are on the stabilization aspect of it in the short term. And that looks okay. But what we're saying is that we really are not that clear on how we're progressing in terms of the fundamental structural issues we need to address so that we don't get back into this problem.
Do you think that this program is not giving much information to the business sector and not you as a person?
Yeah, understand.
Yeah. Do you think that there's still not more information? I mean, people who ask me, the judge, what is the status of the agreement with the Eurobond holders? I have some funds in there. I mean, these are normal business persons, medium size, who are asking me all the questions. George, you deal with the fund. Do you think that there is still an information gap that is fueling some of these concerns?
Yeah, I mean, there is some information out there, but it would be nice to have a lot more. So, for example, if you talk about commitment and expenditure controls, right? We know that in this country, the things that have created problems for us are lack of sufficient discipline around commitment and expenditure control. We know. So, as part of the fund program, some of the things we are supposed to do to get this aspect of our financial management under control, they are there. They are part of the things that we're supposed to work on. What we are saying is that it would be nice to keep us updated, keep us informed on a regular basis, transparently, as to where we are. And that helps to build confidence so that we can confidently, as business people, say that if we look at the medium term or we look at the long term beyond, let's say, 2026, things look okay. And the reason I pick on 2026 is because we know that we have some debt forgiveness and some suspension of debt servicing till 2026. But what happens after 2026? Unless we have put in place those reforms that will enable us to be in a position to honor our obligations post-2026, there's a risk that we may run into some difficulty. And I'm not saying that that's the case. All I'm saying is that additional information would be useful and would be helpful for people to make up their own minds as to what the outlook is.
Mr. Ashiagbor, you're not the only person who's raised the concern about what happens after 2026 in terms of the debt repayment issues and all the rest. And do you also think that all these things are fueling the concern that what happens when the big brother is gone? What happens if my father is gone? I mean, or I lose my grandfather who has been there to check me and I'm behaving as a good boy now. When my grandfather is no more there, would the George Wiafe or the Kwabena Mensah be that good boy? And it's a genuine concern out there.
So it's a genuine concern. And look, the concern is not necessarily just about the 2026 and the linkage to debt repayment. The concern is that the fundamental things we need to do, the financial, public financial management reforms, the revenue mobilization agenda, the debt management issues, the tax reforms, the reform of the structure of some of those taxes. See, if we get those things right, it puts us in a better position and enhances our chances of being able to continue on a sustainable path. So that, I think, is really the concern. The 2026 and the debt is just one of those indicators. But when we talk about risk in the economy to business, without these fundamental issues being dealt with, if expenditure controls or commitment, even before expenditure, if controls around the commitments that we make, which ultimately we'll have to honor and pay for, are not dealt with, so that we only commit to things that we know we can comfortably deliver upon. If those things are not dealt with, then obviously it poses a risk to the economy. And these are things within our control. And don't forget that we also have external factors that are outside of our control. So when you layer that on, to the internal risks, then you have a bigger challenge to deal with. So at least let's deal with the ones that are within our control, and then the external ones we'll deal with as and when they come along.
There have been several reforms that have taken place when it comes to even expenditure controls and all the rest, and gift mix and all the rest. But again, I go through your report again, and then there is again another concern there about the election-related spending and whether the laws are the way to go, or we need another layer again of a fiscal responsibility council and all the rest. It appears that from PwC's perspective on your analysis, you think that really we have concerns and again fears about whether the expenditure will be tight going into the election season.
Absolutely. I mean, we've seen this before, so we can't pretend that it's not a risk. It is a risk. With everything that has happened over time, we hope that risk is mitigated because we're learning our lessons and we're now feeling the impact of some of those overspending activities that we engaged in. But to your point, reforms, yes, we have all
we have commitment from the president to the finance minister.
We have all of those
things. Are there, so
all of those things are there.
We can go and sleep, some will say.
No, all of those things are there. But you know, what is important is implementation. And what is important, and the most difficult part, and this is not just a government thing, in business, even at the personal level, what is very difficult is to change your habits, right? So you can have all the nice plans. I'm sure you probably made some New Year resolutions.
I did.
And I'm not sure whether you're on
I
course.
didn't even meet one of them.
Exactly. So that's a typical example. What we are saying is that rather than layer on new resolutions or new laws or new policies, with the ones that we have, if we can begin to implement them effectively, actually it's unfair for me to say begin because we have begun, but if we can enhance the implementation, then we stand a better chance of building the level of discipline, which can then generate confidence and then boost the economy and reduce the chances of us getting back into this situation. So that's basically all we're saying. So our view is that we don't necessarily need another set of laws.
You think the fiscal council is not needed? From what I saw in your report,
I think
we don't need it now.
We believe that we have an act of parliament,
Fiscal Responsibility Act,
and we have all the rules around public financial management. Those are good laws and regulations. If we implement them effectively, it will reap significant benefits for us, and we believe that's where we should start. But if we layer on another council or another law, it's nice, but where the foundation itself is not as strong as we would like it to be, maybe that's where we should put our focus for the time being. That's what we're saying.
I get from you that the challenge more is the commitment and the zeal to do the action or perform the action than the laws that are, because some are saying that there are a lot of laws in place that even censure ministers for overspending, but we are still having that challenge.
Because we haven't implemented the laws effectively. I don't know, I've not seen or heard of anyone being
censured
for
overruns
for overspending or anything of that nature.
Which has been a habit over the years in terms of deficit.
Exactly. So, but there's provision for that. I mean, I'm sure you maybe not always, but sometimes follow the public accounts hearings and all of that. So we know, we see all of these things, we know, but the question is, what then do we do? So what we're saying is, let's put our energies into implementation and making what we currently have work better for us. We can certainly build on what we have, but to direct the effort to strengthening the foundation as opposed to building more layers is what we think is preferable.
Again, you talked about the Public Accounts Committee and even the Auditor General's report and the structure. I mean, you've been in this space of auditing, and I know what happens when you go into the space and auditing, the things you see and the queries and all those. I mean, for you, a quick scan, not in its specifics, but the infraction, the Auditor General's report. For you, where's the problem in dealing with this? Is it a human thing? I mean, I was speaking to someone in the ministry, and I'm not mentioning, the person was complaining to me how some people are trying to circumvent even the gift mix process.
Yeah.
And how she is vowed the judge, I would never encourage it. And I will make sure that even if it will cost me my job, I prepare to go home. What is the problem? Is it a political thing that in terms of leadership across various governments, or just the human nature where we are naturally corrupt, we are naturally want to circumvent? I know this is the space where you always have to issue queries and insist, even in the private sector. What is the problem and how can we get around it?
George, you referred to human nature, and human as we are, I think we'll all take the path of least resistance if we're allowed to, right? And that is why you have policies, you have procedures, you have guidelines, you have oversight institutions, and then you also have consequences and consequence management. So you need to have all of these, not just to have them in place, but to make them work. So that, again, human as we are, you can manage things. If you take a simple example of traffic lights, for example, if you have a set of traffic lights and everybody knows that if you jump the traffic lights, nothing happens. People continue to jump the traffic lights. But if you know that if you jump a traffic light, there are consequences, you'll think twice. So it's about having the whole package of laws, policies, procedures, oversight, and then consequence management. And until you have all of those working and you have examples of those things working, I think you're always going to have the problem of human as we are, people trying to cut corners. And I think that's where our biggest weakness is.
Let's look at the revenue space and the reforms that were outlined. And you spoke about that in your report as well. In terms of meeting the NDA target, is it feasible? I mean, with all the reforms that they've outlined and tried to revise in the mid-year budget.
Oh, you mean in terms of the revenue?
Achieving our revenue target, NDS, looking at the reforms that are being undertaken, and are they well tailored, or we still need some adjustment? Because we have 3 or 4 months end of the year, and government, let me first even get your quick thoughts on the revenue measures and whether it will take us there.
Obviously, revenue is always a difficult one. I think that we do need to, raise our revenues. I don't think there's any doubt about that. The question that we grapple with as a people and as business people is, what is the best way to do that? But answering your question directly as to whether we'll get there, I think that there's definitely a potential to get there. It depends, again, on the level of enforcement and whether those who are charged with raising the revenue and ensuring compliance with revenue measures have the wherewithal to do so in a broadly based manner. And when I say broadly based manner, I'm going back to the old debate about the tax net. So I think that, yes, there's potential to achieve that target. But even so, and I think like I've said on other occasions, even if you miss your revenue target, I don't think it's fatal, provided you're being proactive in terms of managing your expenditures alongside. Because at the end of the day, what are you trying to do? You're trying to make sure that you don't live beyond your means. So, and we do this as business, and we even do this as individuals. If the revenues are not coming in the manner in which you had hoped or in which you intended, you need to start looking at other ways so that you don't end up creating problems for yourself in the bottom line. It's definitely more difficult from a public or government perspective because you have some expenditures that are fixed, right? But there is still some room for you to be proactive in terms of how you manage the overall package. Is
it the approach in the collection or what? Because again, I engage a lot of businesses who are complaining, they feel that they are being overtaxed, the burden is so much. Is it the approach or what? Because there are some businesses who also think that, listen, we are being stressed and we just can't stand it.
Absolutely. I think that businesses in the more formal sector all have the view, well, I shouldn't say all because I've not spoken to all, but largely have the view.
Those you've engaged.
Exactly. Largely have the view that they are soft targets, let's put it that way. and that in the revenue mobilization drive, they are constantly being targeted. It's an old story. We need to broaden the net. If you are in GRA, I can have some sympathy, because trying to raise revenue from the informal sector may not be as easy as it is in the formal sector. But these are some of the difficult conversations we need to have, and we need to bite the bullet, really, in terms of broadening that tax net so that everybody is contributing more equitably. You know, it's the old argument about being able to raise more.
Yeah.
If you reduce the rate a little bit, but get
Do
more
you
people
subscribe to
into the
that
net.
argument about the review of the rate levels, and that could bring in more to the pool?
Yes, but not by itself. You can't just expect to have more revenue just by reducing the rate. You would have to consciously find ways of bringing more people into the net. So the idea is that if you are trying to raise 100, do you raise it from 2 people or do you raise it from 10 people, for example? You can still get your 100 depending on how you do it. So reducing the rate by itself, we don't think is going to bring more revenue into the basket, but reducing the rate whilst broadening the reach or getting more people into the net then has the potential to give you more revenue in total. So it's not a single approach.
Looking at the challenges that we are facing with the economy, the argument about our tax GDP ratio is low, we are still not collecting enough. If you look at the half-year numbers, the fund program and all the rest, a lot of businesses have pushed for some taxes to be reviewed, and looking at this challenge of the economy and the concerns of businesses out there, do you think there is a space for some review, dropping some of the rates and even scrapping some of the taxes? Major one is e-levy.
Look, I think it's a difficult debate. We understand and we see the strain on businesses on a day-to-day basis. So we understand the call for some reduction in the level of taxation, because that becomes a disincentive to investment and a disincentive to business. However, we also understand that if you look at the broader picture, reducing the amount of revenue that's coming into the national coffers at this point in time is going to create another dislocation which has its own implications.
Scrap e-levy and then widen the tax and bring in more of this?
Right. So you can scrap e-levy if you choose to, but then you need to replace or get an additional source of revenue some way, somehow. How do you do that? You do that, as we've just said, by maybe broadening the net. But broadening the net is not a short-term endeavor. You can scrap e-levy tomorrow.
COVID-19 fund as well.
You can scrap it tomorrow. But where will the revenue then come from? So practically speaking, and I say this, I don't say this lightly, because I know the burden of taxation that we're all experiencing. It has to be a balance, so that as we work on, and again, it goes back to what we were saying in our review, that we need to understand how we're progressing on the revenue mobilization measures. When we say revenue mobilization, we're not just talking about increasing tax rates. We're talking about how you use tax policy to widen the net and to tax those areas that are maybe getting away with lower than equitable taxation, as where other people are overburdened. How are we getting along with that? Because those are the things, if we get right, will allow us then to reduce the overall rates of taxation without necessarily creating a major dislocation in the economy. It's not easy.
It's not easy. I know that. This is PM Express Business Edition, engaging the senior country partner at PwC Ghana on the economy, the outlook, the business environment, and we'll be talking about the banking sector and their flagship banking sector. We'll be right back after this break. Welcome back to PM Express Business Edition, as we engage the senior country partner at PwC Ghana, Vish Ashiagbor, on a lot of issues, the economy, the environment, and then the banking sector. But before I get into the banking space as well, Mr. Ashiagbor, looking at our broader tax policy as a country, is it a disincentive to businesses or something can be done? Because there were recent times where we had some businesses trying to relocate, downsize, and they cited the tax issue as a major reason for it. Are they being fair? Because everywhere, even Apple in the US is trying to move its headquarters to somewhere because they want to reduce their tax exposure. Is it just that businesses just want to complain? Or let's look at the Ghana situation, the policy, and whether it's bad enough to let a George Wiafe and co that has been operating in this country for 10 years say that I'm moving to Ivory Coast.
Well, based on the engagements we have with the business community, our clients, etc., unfortunately, where we find ourselves is that not only is the tax burden high relative to other jurisdictions where those businesses may operate, but there's also lack of certainty. We've spoken about, about that earlier in this discussion, lack of certainty, because we keep coming up with new things which are not anticipated. And then finally, the structure of the tax landscape has become complex. Again, because we are looking for ways of making more money, we come up with all kinds of innovative structures and levies and different taxes and things that are probably outside what a business person would consider to be the norm. So all of those things have complicated the tax landscape, and therefore, again, businesses like some level of certainty and some level of predictability. So if I know that I have to pay tax, I probably am not averse to that because I understand the reasons for that. But I would like it to be as simple, as transparent, and as predictable as possible. The other thing is that, and with no disrespect to the revenue authorities, how we interpret some of the tax laws can also be confusing to the business community because we don't appear to be consistent in some of the application of those rules. And I think if you speak to a lot of the larger taxpayers in Ghana, for example, they'll tell you about various challenges they've had over time, bordering on how those laws are interpreted. So unfortunately, over time, we've ended up in a position where the landscape is complex. And business does not like complexity. So where you have the opportunity to establish in a more favorable, and favorable does not necessarily mean a lower tax rate, although it is a factor. Favorable is around clarity, is around predictability, and is around alignment in terms of interpretation of the laws. Then obviously businesses will begin to look at that.
Before I do the proper banking survey, I mean, we've seen half-year results, we've seen full-year results. Can I look at the numbers as a layman and say that, oh, they are already out of the storm with respect to based on the numbers that they posted for these commercial banks? Solid numbers, half-year numbers. Some are even making already more than what they have made full-year and all the rest. And again, could it be gyrating the numbers and maneuvering the numbers or no? But I mean, can we look at the numbers and make that unintelligent guess in research that, oh, they are very soon they are out of the crisis for these commercial banks?
Well, I think the way to look at it is to say that the banks have made significant progress since, when you talk about the crisis, I'm sure you're referring to the DDP.
Yeah, domestic relations program, yeah.
Correct. So I think the banks have made significant progress. And even before DDP, I think what we saw in the banking landscape is a very strong move to strengthen the risk management procedures and the oversight or the financial strength of these institutions. So we shouldn't be too surprised with the rebound because the systems that the banks put in place post 2017, 2018 have kind of helped to manage some of these shocks. But to your question as to whether they are
recovered soon,
they have recovered.
Oh, let me use the word, borrow the term, turn the corner.
I think the answer again is cautious optimism because, you know, banks are one of the most vulnerable, or the banking sector is one of the most vulnerable to economic shocks, right? And we know that the economy, much as indicators are moving in the right direction, is still in some difficulty. So you'd have seen, you referred to the governor's MPC press release earlier, and you'd have seen from other reports that there's a risk of non-performing loans emerging. And you know, NPLs, non-performing loans, are always a delayed phenomenon. So that risk remains. So back to your question as to whether they've turned the corner. So far, so good, but this is not the time for celebration or for them to rest on their oars, because those risks are still out there.
NPLs, and I was shocked, but there are some of the school of thought that it was expected because of where we are coming from as an economy. But does it also raise a lot of questions from the banks themselves in terms of the credit risk committee, the scrutiny and everything? Or what is causing this problem? And some will say that 24% industry, it is quite high.
Yes, but you know, the business of banking largely is about managing risk. And so credit committees, all the other committees that banks have, like I said earlier, actually have strengthened significantly over the last few years. So the business environment is what kind of ultimately dictates the credit quality or the asset quality that financial institutions have. Now, the fact that NPLs are ticking up really is not a surprise, and I wouldn't directly attribute it to risk management weaknesses in banks. It's a factor of the overall economy. What now becomes important is the level of intervention and how quickly these banks intervene to arrest that phenomenon, and to the extent possible to get these borrowers back on track. So I wouldn't attribute it directly to weaknesses within the banks, but it's just a factor of the economic environment that we're currently experiencing. And hopefully, as the economy also settles down, some of those NPLs can be reversed.
From your survey, do you see the banking landscape changing? Or it appears that it's still the same, but it appears that things are changing in terms of the priority for customers and how they even want to engage with their banks and all these modules and platforms and all the rest?
Oh, absolutely. The landscape is changing. The ways that banks deliver service, the products and services that they deliver, as well as the segment of the population that they deliver to, all of that is changing. And you know, the world around us does change. And therefore, if you are in the service sector, as banks are, naturally you'll expect some changes. The demands are different. Technology has changed things. Fintechs have changed things. So yes, there's significant changes in the banking sector, as there always is.
I was surprised a bit about the WhatsApp, because I know where the banks are coming from in terms of security.
Absolutely, yeah.
But still, a lot of the customers now want to use that module or platform to engage some of these banks.
So that's what the customers...
the customer is king.
That's what the customers say, and you're right, the customer is king. However, having said that, regulatory security, let me be specific, security implications need to be carefully thought through. So customers are looking for convenience, especially the younger population that today are just digital in everything that they do. They are looking for the quickest way of doing things, the simplest way of doing things, all hours. And WhatsApp is a very popular platform that they subscribe to. However, banking, the nature of banking is such that security and other implications need to be carefully thought through. So we'll see. I'm not quite sure whether that's a demand that can be satisfied.
Does your survey again expose the fact that there has to be more investment in this space when it comes to tech and fintech? Because any bank that doesn't take this space serious, going forward, you're going to lose out. No longer is it about the fiscal evidence again.
Yeah.
But a mix of the two is going to help.
Oh, but I think the banks have been aware of this for a very long time. So today, I don't think you'll find a bank that does not have digital channels. They have their apps. They work hard to make sure their ATMs are providing service. they have their online tools, because again, the customers are asking for different channels in which they want to relate with their banks. So I think the technology side of the argument is pretty well established, and people are now moving into digital banking, etc. What our assessment or survey looked at was the softer side of things in terms of the customer service, the customer experience, because you can have all the technology, but if the customer or the technology is not adding to customer experience, then it becomes something that works against your business efforts.
Do you think that the banks are making progress in that? Because I know when it comes to customer service, a lot of people are complain a lot.
Oh yes, but I think the banks are increasingly focused on that. So what our survey sought to do was try and indicate to them where the key areas of service or experience are that the customers are looking for and that they should be seeking to focus on. So yes.
If you look at the half-year numbers, do you see that the banks are again going to end the year on a very, very good note?
Well, we hope so, because the banks ending, look, banks having good performance is good for all of us, actually. Yes, it's good to have strong financial
Because I asked you because of the fact that Q1 is always difficult, Q2 is difficult.
Yeah.
And if they are even making these numbers in this period, fast forward, you could have a great year for these banks in terms of the earnings.
Well, subject to the risks that we've spoken about. There's risks around NPLs, for example. So we will see. But from our point of view, we do hope that, yes, the banks have a good year, because like I said, strong financial institutions are good for all of us. It's good for the economy. I know people have traditionally been concerned about the profitability of the banks. Are they making too much money, et cetera, et cetera. But growth of institutions, financial institutions especially, we believe is good for the economy because it enables them to support business.
How do you see the future of banking? I mean, going forward, because of the engagement that you had, the short term, not maybe 20 years, but the next 2, 3 years, 4 years, 5 years in Ghana?
We think that the future of banking lies in the continued application of digital tools, but because everybody, I mean, that's bread and butter today, then the future also lies in how you differentiate yourself from the customer experience point of view, because customers are looking for a certain level of service, and that is where the focus is going to go for banks here in Ghana.
Mr. Ashiagbor, am I right for those who argue sometimes about the NPLs, about the connection with the interest rate as well? And some feel that, again, maybe educate me, or someone saying that the high interest rate could also be a factor when it comes to servicing these facilities.
Absolutely, that is a factor. But what drives interest rates? Interest rates are driven by risk in the economy, risk in the borrower or the borrower's business, and yes, to some degree, the cost operations of the banks that need to be recovered. So that is why the performance of the economy generally ultimately impacts on the level of NPLs. So yes, interest rates is always a consideration. That's why the economy needs to be strong, so that interest rates can be moderate.
Indeed, the economy being strong for interest rates to be moderate. I know that's the senior country partner, PwC Ghana. I know the debate will still go on, and we'll still be back for more in terms of the economy, the banking sector, and then the business outlook. Vish Ashiagbor is the senior country partner at PwC Ghana, engaging him on thoughts about the economy, the business outlook, the banking sector, and of course, the future of banking in Ghana. My name is George Wiafe. Have a great day. This has been PM Express Business Edition.